Welcome. Okay, we're working. Everything's working.
We got the dirty 30 here with us today.
How's it going, everybody? Welcome to another edition of Market Power Hour. We're glad to have you here. We have Josh and SCHMITTY here. Both of these guys bringing nothing but concentrated alpha for each of you. As usual, we'll try to keep this thing to an hour or less. Markets have been effectively sideways for, I think we're coming up on our 22nd day. But despite all that, these guys are bringing the heat. They've got some interesting things to look at.
So we had a CPI print today, which people were still surprised that it came down. Like, look, people, just go to Trueflation. If you really care about inflation, just go to Trueflation. Okay. You can dig super deep into this, look at the methodology. Chainlink's involved. I don't even care about the crypto side of things. It's just kind of interesting how they get the data points. But you have to think the Fed has something like this, right? Like, they have to.
Sure.
They have to be looking at real-time data. I know they kind of have real-time data with this like nowcasting thing that updates every day, at least each business day. But so here's the problem. Like, yeah, CPI came way down, right? It's kind of flattened out, and the nowcast is suggesting a rise next month in the CPI print from 3 to like 3.25 or something. So the market's gonna freak out when CPI goes up. Okay. The next CPI print is after the Fed meeting, obviously, but I don't know. There's a Fed meeting this month on the 26th. Market still thinks that there's going to be a hike. It just could get really bumpy, like in the minutia of it all. But in the meantime, like, we're towards the end of the cycle, right? You got to think we're towards the end. Like, yes, the jobs market is tight. We were just talking about layoffs. Like, the interesting thing about the macro side, I just feel like the data is to both poles, to both extremes. Like, houses most unaffordable they've ever been, cars most unaffordable they've ever been, credit card rates the highest they've ever been,
Personal savings are like a multi-decade low.
Also, renting is now cheaper than paying a mortgage.
Ownership, yeah.
Transportation attendance or rates or whatever you want to call it is just roofing. Like, I think it's an all-time high as far as the number of people going through the gates at TSA. That's how they measure this stuff. It's the last figure I saw was like almost 3 million people in one day. Just insane numbers. And if you've been to an airport lately, you'll know, like, it's just packed. My flight was delayed. I just got back from because they didn't have flight attendants. Like, again, just probably just an anecdotal coincidence, but just another indicator of like there's staffing problems. It's just, everything's just so busy, right?
Right.
So are we really in a recession? I don't know. But you could justify that and say, well, we're just going to keep raising till the jobs numbers look bad, and they don't look bad right now, even though they're probably fake and dumb. They don't look bad, right? Like, the numbers can't be real. They just can't be, but they don't look bad at the same time. So I don't know. So there's a lot of this, right? And this CPI discussion feeds into the DXY discussion, which SCHMITTY and we always talk about, obviously. I'm still on this bandwagon that DXY is going to start making its slow descent to 90. I haven't looked at the dollar milkshake guy, his Twitter today, but I'm sure he's getting so much shit. He's like,
yeah, that was a big meme for like a couple months.
It's like the Santiago, I forget his name. Anyway, it's just funny because, like, when DXY was mooning and roofing, everyone's like, yeah, dollar is amazing, we're going to 200, whatever. And now everyone's talking about like BRICS currency, gold-backed currency, like de-dollarization, whatever. I don't care. It doesn't matter. Just look at the chart, right? Like, that's all I really care about. But this objectively doesn't look bullish to me. I don't know what SCHMITTY ultimately is going to say, but if we look at like the 2-day, not knowing what this is, looking at it in a vacuum, like, Yeah, it looks bearish, right? Am I crazy? Somebody tell me I'm crazy.
No, I mean, I think you brought this up last time, but the fact that it looks so much like the 2018 Bitcoin blow off, the retrace, the consolidation for a year at 6K, and then finally kind of broke through it to the downside. I just can't help but continue to think it looks just like that.
So as bearish as this is, crypto really hasn't gotten the message. Probably because we've been so just disconnected. All of our correlations are dropping. You know, our correlation to the S&P is dropping to multi-year lows, NASDAQ multi-year lows. Our inverse correlation DXY, you know, that's zeroing out or whatever you want to think of it as. So, you know, it's tough because it should provide a tailwind for us. It should help us break out of this range. Like if there's anything that's going to do it, you'd think that would help. But here we are. Still in, this was, sorry, I got to find it. This was your chart from last night, I think. Jack did a stream last night. Price is what, 30.5 right now?
Yeah, 30.4, Josh.
Oh, people were like
Perma
freaking
bull.
out. People are freaking out about this what is it? Silk Road coins moving around to Coinbase, I guess. I don't know. Like, who cares?
Oh, is that
Who
what just
cares?
happened? Is that like a today thing?
Yeah, it was like 300 million in BTC. It got moved to Coinbase. I don't know. I just couldn't care less about that sort of thing.
Yeah, same.
I'm actually glad it's moving now. I wish all the stuff would move now. You know, look at the alt overhang. Like, look at all the stuff at Celsius, FTX, BlockFi. They're like squabbling over all these altcoin values for litigation, right? Like, I just saw somebody suing Stakehound. I think it's Celsius is suing
Celsius, yeah.
for all these altcoin. You know, it's like there's so much baggage there for the altcoins that still is working its way through the system. And let's say you get 30 cents on the dollar, 50 cents on the dollar back from Celsius or BlockFi or FTX.
If that.
Yeah, let's say it's 10 cents. I don't know. Like, what are they going to give that to you? And are they going to give you an option? Or are they going to say, hey, you can have it in Matic, DOT, or ETH? Or are they just going to say, here's the USD equivalent? I don't know what they're going to do, but
NFT
Probably not
equivalent.
that.
yeah, in Miladies, can I have it in the Milady equivalent? I don't know. I'd assume it'd just be USD, right? Or I don't know. I don't know what they're going to do, but assume the worst case. Assume they have to liquidate all that stuff. On the alt side of things, you know, that's not good for alts. People are flipping out about 300 million in the BTC, the most liquid trading pair in crypto land. Just wait till all that money hits the alts and it's going to get ugly out there. But
so side note and kind of,
yeah.
you know, directly related to what you're talking about. Has anybody heard anything new about Mt. Gox? Because remember, there was all that conversation about the bankruptcy court was about to, you know, they were gathering information from everyone who had a claim, and the information was like, how do you want to get paid out? So everyone's like, whoa, we're about to get paid out, and that was all in the news and stuff. But it's probably been 6 months now since I've heard anything about it. It's been a while.
Yeah, I haven't heard anything recently. There used to be a subreddit which I think still exists. I think it went private though. It's like the Mt. Gox creditor subreddit that had really good, like, up-to-date information. There's this other website that I use to track the coins that have moved or not.
Oh, that's handy.
And they haven't moved. You know, I don't know. I assume this is up to date, but you can always like check the addresses, right? You know, just look and see if anything's moved around. But anyway, yeah, I have no idea. You know, that would be totally ironic if all this stuff, all this 2022 stuff gets figured out before Mt. Gox, still like a decade later, still trying to deal with. What an embarrassment. I mean, come on. Get it together.
It makes me sad for the FTX people, rather. You know, that we already have this blueprint of how these bankruptcies and litigations and stuff go with Mt. Gox, and it ain't pretty and it ain't quick. So
The
if
lawyers
anybody's
just drain it till it's gone.
Yeah.
And the other thing with the payouts at FTX is most of that money, I thought, was international. So at that point, you have like FX stuff involved, right? Like, do you give it back in rubles? I don't know. Like,
yeah,
shekels, whatever currency it is, you know, that's a whole nother issue. I don't even know. the other big thing in BTC land has obviously been this Bollinger Band squeeze. Anytime price doesn't go anywhere for a very, very long time, you get in the volatility indicators like this telling you that things haven't done anything for a while. You know, it's kind of like, duh, but it does help you try to gauge like if there's a bias in the market. So you can look at this a few different ways, but if you just use the default Bollinger Band settings, you'll get a picture like this. I have an overlay on this that sort of highlights bullish and bearish bias based on the width of the Bollinger Bands. But
what, like the
anyway,
squeeze? Like a,
yeah,
is it looking for a squeeze basically?
Yeah, so what it does is just measure the caliber of the bands. It uses Bollinger Band width, and then it just highlights based on where price is relative to the 20-day moving average. But if we
interesting.
If we continue to squeeze up here, that should lead to bullish continuation. So we can look at all the previous squeezes, we can look at how successful they've been, we can look at how many have been bearish or bullish, and it all is balancing out to be, you know, pretty conclusive as it's squeezing, so long as we continue to maintain a price above the 20-day moving average.
Wait, can you repeat what you said about the bullish bias that you have on there? So what is it doing? It's you're overlaying
it's
the price relative to Bollinger Band width or percent B.
Yeah, so what this overlay does is look at the Bollinger Band width at a specific level, and then it highlights red or green based on price relative to the 20-day moving average.
So it's like it's squeezing and it's above the moving average, I guess, equals
right.
Green.
So it's just comparing previous squeezes. In the last squeeze we've had, which isn't common at all, this is super rare even in the decade look back. The last squeeze we had was in January. But I said in the video I just put out on YouTube, shameless self-plug, that in this squeeze we had an inverted, sorry, not inverted, we had an Adam and Eve, which was like a confluent chart pattern, right? Post FTX, post tax loss harvest, selling, whatever. Here, I don't know, is this anything to you guys? I don't think so. You said on your stream last night, Jack, that it wasn't even like white coffee in, right?
No, unless it, just kind of the big picture there, like March to July. No, that's just
no, not that. Just this like the squeeze that we're.
Yeah, I'll go over some stuff that is white coffee in nature, but it hasn't really like hit the green light yet. It's just like a setup we're potentially looking for, and it could go on to do that, but so far it's nothing clear. No.
Right. So I don't think it's specifically anything like it to me other than potentially like a flag up here. It's not really like a clear bias in one direction or the other that I can see. Anyway, but B-Bands thinks it's bullish as long as we're above the 20-day moving average. And this could, so if we look at like the prior versions of this, the messiest one was probably 2018, but that did eventually flip red. This was super miserable to sit through, by the way. The only wrong squeeze here, by wrong I mean it didn't like preview things to come, was probably this halving squeeze in 2020, where things got super tight on bands and then we went up anyway. So look, it's not perfect, but it does maybe help you see if there's a bias. I think most people would just say it's a coin flip either way, right? At this point, but I still lean a little bullish here on just broadly based on everything that's going on.
As a quick side note, like right where you said it failed or whatever at the halving squeeze in July 2020, that moment in time is one of my favorite ever, because at the top, so it impulsed up, it kind of drifted sideways, and that's when Dave Portnoy said he's like all in Bitcoin, we're going to the moon, and then it dropped like 10% or 15% like kind of immediately after, before the real run. In there, and that's when he said Bitcoin's a scam, I'm selling everything. He took like $1 million loss and he's like, screw this is all a scam, and then it, the rest is history. But that little moment, I love that.
Yeah, no free rides, as they like to say. Even down here in 2016, after 250 days of consolidating, there was even a epic fake out here and then a short squeeze right after that. I don't know what the short I know you look at funding a lot too. So back then in 2016 and even 2018, it was the picture of like the float, the short float or the long float or whatever was much clearer because it was mainly just like Bitfinex and BitMEX. These days it's kind of all over the place. So I don't even know where you'd even look for that to get a clear picture of long short bias, but I know CoinGlass does stuff like that. Anyway,
yeah,
maybe we're setting up for a short squeeze too. I don't know. I don't think so, but in any case, leaning slightly bullish personally. I don't know. I don't know about you guys. If DXY is breaking down, I can't get bearish. Let me just share one other thing real quick on Bitcoin. Cloud looks fine. You know, everything's kind of just boring. There's nothing really to say.
Yeah.
Trend-wise, it looks fine though. So I'm not going to be like super short up here. I don't think there's a justifiable reason to be short or to cut your longs or anything like that. Even if we get to like 28, things are okay. Like this could break down and things will be totally fine in my book. I don't have any issue with that. But yeah, not too much going on that side of things. I've really been watching. So I'll ETH real quick. Also a bunch of nothing. I think you said yesterday it looked like a rising wedge to you. To me, it looks more like a ascending triangle. Mainly because this exact pop was the staking unlock. So I'm going to give it a little bit of leeway as far as what happened there. But maybe that's just me curve fitting. I don't know.
It's reasonable, I think. Sure.
I just like how it looks on the volume profile, especially, you know, this was FTX blowing up. That's why that volume was so high on that day. But I still like this. I still like higher. ETHBTC though looks tragically bearish to me still. It had a shot, right? It had plenty of ammunition to go higher. Technicals, fundamentals, and here we are with Bitcoin ETFs, no ETH ETFs. So yeah, I don't know. Doesn't look great. There's a channel, maybe a falling wedge. I certainly would expect this to retest, you know, the previous low. I think that'd be the most reasonable thing. But ETHUSD looks pretty good. Some like other quick alpha, COP and Curve both look pretty good. You know, you're probably late to the train on Curve, or sorry, Comp at this point. But Curve looks okay. You know, I don't know like the fundamentals here. I don't know about like coin unlocks. You got to be careful about emissions, that sort of thing. But on technicals, it looks okay. Comp got a lot of volume there. I think that was like a real world asset thing. I don't know. I'm just looking at charts, people. Okay. It looks okay. And then last thing I'll just mention is coin, obviously, same thing. Same sort of inverted head and shoulders. Looks really good. Coinbase is a mess. I get it. But chart-wise, it looks pretty good.
Yeah.
And that's pretty much it. I mean, ETH is another one. You know, if you want to get bullish ETH might be a decent buy because it's got a massive discount still, negative 45% discount. And again, it's got this setup where I don't think it'll go to 28, but I think it could have a decent run. You know, everyone's looking at Bitcoin and so focused on Bitcoin and dominance, this, that, and the other thing. Just, you know, something to watch. Setup wise, it looks ready to go. That's all I got.
That's a good chart. I haven't looked at ETHE, but it makes sense. Did the discount for ETHE basically mirror the GBTC discount? Were they kind of neck and neck?
Yeah, so it actually got worse than this is CoinGlass, but
oh, nice.
It was at negative 60, wasn't it?
Turn my face off.
It was way down there. Yeah, it was down to negative 60 at one point, negative 47, whatever it is today. So that's also improving. The thing about these grayscale products is they're going to have a news-driven price action relative to the ETF announcements. So if the ETFs are denied, they're going to dump. If they're approved, they're going to pump, right? You just have to keep that in mind.
Right.
But
can you show the Bitcoin one as well?
Yeah.
And how deep? I'm just curious how deep that discount got.
It got in the like -50, I think was the ultimate.
Oh man. Okay.
And that's recovered quite a bit.
Interesting.
And so this is more like, potential tailwind for GBTC to move higher until that discount gets a little bit more reasonable anyway. The same with ETH,
Nice.
right? People might look at this and this might get closer to 0, and then eventually they might rotate to ETHE. I don't know. Even though arguably ETH has a 0% chance of getting an ETF anytime soon. Something to think about. Because there are a lot of people who have like equity positions.
Sure.
That's all I got.
Well done, sir. I like it. Nicely done. Schmitty, you want to go next? You want me to go?
You can go.
Okay.
Yeah, go for it.
All right, here we go. Let's see if I can click to the right transition. We did it. Okay, cool. So let me pull up this. So here's the trade range Josh was just talking about. Moon or doom, right? This is our moon region. Here's our doom. So to me, this is a big floor is lava moment. Anywhere in this kind of 29.5 to 30 is not where I want to see price. There's been a lot of interesting things happening. We'll go over that kind of individually in a second, but the most important kind of big picture thing that I'm keeping in mind here, and Josh, this is with respect to like the WYCKOFF side, is there's a really strong argument that conventional reaccumulation is underway right now. So what you tend to see in reaccumulation is a strong impulse to a certain level and then a trade range formed, right? So we can easily point to the chart and say, okay, impulse and trade range, good. Now, if we kind of dive more into it, you'll see that there's really these things referred to as creeks, which is basically like sell pressure. And then there's a break of that creek, which is a signal of strength. I don't want to use sign of strength because that's like a Wyckovian term, but it's a sign to the market that like, oh, this is not actually going to break down like you might think. So we've seen a number of these creeks, and it's very common to see, 2, 3, 4, whatever. There's not like some magic number, even though the fractal here shows 2 really at play. But the idea is there's a sideways trade range. There's downward pressure that fails to break support, right? So that kind of goes back to why this is a floor is lava moment for me. And what I'd like to see, and the thing that would make me say, okay, that is what this is. This is, big check marks. This is reaccumulation. What I want to see is this moment right here. The last point of supply or the sign of strength, or call it whatever you will, but basically no matter what happens in here, this is kind of like the big black box where price just does this the whole time. But eventually I want to see a big explosive move with some consolidation and then a big move up. So we've seen these before. We've seen these through Bitcoin, Ethereum, whatever, like other assets. Sometimes this lasts one day, sometimes it lasts a month. Like there's no telling how long this consolidation might be, or how jabaity it might seem, like a big impulse only to come all the way back and consolidate and then go. Like all these fit the bill. That's all fine. But the punchline is we want to see this zone. We want to see consolidation in this zone and then a further move up. Should that happen, so I still maintain that I want to see Bitcoin, and I just continue to think that it's very likely that we see within this calendar year a run of this particular level for a number of reasons. And that level right there is like 48, 49K. So a break up from all this mess, all this consolidation, this reaccumulation, whatever it is, should we be able to check that box, it would make for a nice continuation run, only to give it all back. Like I still think even if we run all the way up to say 50K, just under 50K, whatever, I think it makes a lot of sense that it gives half of it back, basically a 25 or to let's say like a 50% drop going into the halving next year makes a lot of sense to me, based on pivots and a couple other things, and just like the fact that markets love to screw the bears, right? Because the bears won this entire downtrend, and now they're getting all their stops run, and anybody who's long through here gets rewarded, and then screw all those guys, right? Run all their stops, leading into the halving before we go on to make new all-time highs. Like that kind of big picture, that makes a lot of sense to me. I don't know why this got scooted all over. There we go. And then the other thing is it's interesting to me how similar this year has behaved compared to the last pre-halving year. So the halving's next year, right? So that makes this year the pre-halving year. Last pre-halving year with the bear market low, we had a face melting run. It rallied all the way above a particular level. From the high to the low, this was the 618 extension, the retrace. From this high to this low, this is the 618 extension retrace. This year again, we have the bear market low coming into the year. We've had a pretty nice run. It doesn't feel like we've had basically a 2x run on Bitcoin from the start of the year, but we have, and that's very interesting. And I think that actually plays into the fact that there's probably still more to come because it's been so boring, because Google Trends are at like a cycle low or a multi-decade low for Bitcoin, for crypto, for any of that. So there's not a lot of excitement. And that's actually a really good thing with respect to, are we at a high? Are we near a high? And I think by the time people start getting really excited, maybe there's ETF news, pick your headline, doesn't matter. I think they will likely be buying the bags of a lot of these guys and capitulate right back to the same people eventually once it comes down. So kind of big picture, that's my battle plan. And I'm watching on the lower time frame for reasons to, adjust that or change that plan. But Josh, Schmitty, any thoughts?
One thing if we break down here, one thing I can see people saying is like, oh, it's a diagonal head and shoulders or something, something gross like that. But even if we break down, as long as we don't break that 25K low, I'm not super worried about it, honestly. Like, yeah, exactly.
Yeah.
But I'm not worried about it.
I think I just can't help but feel like if the market was going to break down, right? Remember we talked about this head and shoulders in there, broke that neckline so cleanly. Let's kind of zoom in on this. We had this head and shoulders, broke down, retested the neckline, nuke it, right? If this thing was really going to give it all back, then that was the time to do it. The fact that it didn't, and it kind of did this ninja barrel roll into, haha, we're actually going to run all the lows and then pop it up here and drift sideways. To me, that is just another big checkbox for like, this is probably going to keep going. That's
and ultimately, look, if you're bullish on a BlackRock ETF, you want the accumulation phase to last as long as humanly possible.
Yeah.
You want to keep DCAing, you want to keep hitting those lows, whatever, right?
Absolutely.
Like, if you think 250 by 25, that's my target. 250K by 2025. If you're like me and you think that's a serious target, then yeah, just grind 25K all day long.
You just, DCA in or whatever, as soon as you get a little lawn mowing money, punt it in there and there you go.
Yeah.
The other thing is I'm a big macro guy. So just keeping the macro picture here, the fact that we had this really nice inverted head and shoulders, like Josh was talking about, breakout, and then a retest of that neckline. Like this is, we're on item 3, 4, or 5. I can't even keep up for why this looks like a really good trend to me. Like this is what I'd want to see. Now, obviously that could change. Like imagine an impulse up and then a break back and then something like that. Okay, well now this entire thing is screwed. Like this whole setup and all this is not what you'd want to see. Now we have this big macro head and shoulders, but that's not what we have. We have about a year of consolidation, a breakout, 3 months or so, like an entire quarter of just drifting down, kissing off this key neckline, and then continuing on. So this is still my target for the year. And what's interesting is, and you'll notice as we kind of go through other assets and we look for like what would be an interesting target, where's the 618 extension, etc. Across the board, like even in the traditional markets, there's a lot of these little so redistribution is a thing where you have like a breakdown, consolidation, a run of the highs, and then you drift down. But across the board, the highs, or at least like this zone, seems to kind of be a target no matter what the asset is. And so this for Bitcoin was around March or April of 2022. And a kind of, as we go through, you'll notice there's okay, here's Ethereum. You know, even in the traditional markets, you know, they had, this is the S&P 500. This had a little spot as well. So no matter what you're looking at, I think it'd be very interesting to see all these levels run before everything cools off. And so even though we're drifting sideways, I still, it's too well crafted of a story to have a downtrend, get all the bears excited, have an uptrend, get all the bulls excited, and then like screw both parties at the same time with a move like that. That's just, it's too eloquent to me to just dismiss. So this to me still, I kind of across the board, I maintain this March to April 22 would be a really interesting level to run.
Well, look at all the crypto equities too, like MSTR, all the miners, like they're all just insanely moving higher.
Yeah.
And so it'd be easy to be bearish if that wasn't the case, but yeah, that chart looks gross. Apparently it's up more than Nvidia is this year.
Oh, it's so stupid. Okay, and then here's this is Grayscale GBTC. Imagine $8, $7, $8 GBTC running all the way up to 33. The euphoria and everything, you know, simultaneous to Bitcoin running that level, just to do something like that. You know what I mean? Like that is, I just think it's like chef's kiss level perfection. Like, oh, perfection. Nvidia is crazy. Yeah, I want nothing to do with Nvidia. I have no comments on Nvidia. That's wild. But yeah,
I think the Nasdaq is actually at your like your retest
that particular level. Yeah, S&P's close, and across the boards, there's different indexes that kind of move at different levels. So just because the S&P is close or just under, it doesn't mean other indexes haven't already breached it, like you're talking about, like the Nasdaq.
Right.
So that is kind of, that's kind of it. The only thing I wanted to point out that I thought was interesting is PayPal having run these lows and rallied back above this horizontal level over the last couple of days, you know, consolidated for a couple weeks, and then yesterday and today it's actually broken up. So I think something like this would be really interesting. And you know, as somebody who loves, oh, hang on. As somebody who loves Wyckoff accumulation, why can I not shake this image from my brain? Well, something happened on my computer.
PayPal is also like crypto adjacent, isn't it? Don't they have like?
Yes, they do. They have like exposure to it, I guess you could say.
Yeah.
For retail.
Right.
So something like this would be very interesting. You know, it would like check all the boxes. Okay, you got your spring, you got your consolidation, off we go. So there's a lot of things going on, and not many of them are bearish or suggest to me like bearish continuation. Like for example, this is a great example here. If I wanted to be bearish on PayPal, I would actually want to see something like that before a breakdown. So just because it broke these lows and then came back, this is actually a very positive thing. It's kind of counterintuitive because a move to the upside, breaking, you know, the horizontal upper bounds, a breakout followed by a return to the range and then a little retest, that's the worst case scenario. But in fact, here we have the inverse. So this is actually looking pretty decent across the board. That, and you know, this was one of our Eiffel Tower targets we've been watching for a while and just talking about how they tend to behave and stuff. Just like MSTR on linear is really interesting as far as the Eiffel Tower goes. This is my last thing, and then I'll shut up and it's all SCHMITTY's. But as far as Eiffel Tower goes, big impulse, drop down, nice consolidation, you know, and we get rid of that, you can see the similarity to just like the textbook fractal. Like this is a like 20-year-old fractal, 30-year-old fractal. This is not like some brand new amazing thing. But what's cool is these fractals tend to, you know, imagine you see kind of a run of the lows followed by consolidation. Oh, now we're talking about Wyckoff accumulation. So all of a sudden, as we kind of move into what I think is the next bull market, you'll start to see these different schools of trading and analysis and stuff. They all kind of like layer on top of each other. So like the fractal Eiffel Tower guys are like, hey, this looks really bullish. And the WYCKOFF guys are like, hey, this looks really bullish. And the Bollinger Band guys are like, hey, this looks really bullish. And before you know it, all these parties kind of work together to build into the next one of these. So anyway,
you didn't say cloud guys.
And the cloud guys and the Elliott Wave guys who are poor asking for
Can
money.
you pull up the weekly Bitcoin cloud real quick?
Yeah.
Because I forgot to mention. I don't know if I said it, but
weekly.
If the thing is, if we break up the weekly cloud, then starts to project edge to edge to 42. From a risk reward perspective, the better trade is 25 to 42, obviously. But we could go sideways for another couple of weeks before, we typically don't. Like it's eerily accurate in its projection. We typically don't like wishy-washy around the cloud. So yeah, those are the trades to watch for. Those are just, don't get chopped up here. This is nothing. This is, who cares, right? Wait for that 25 to 42, wait for the 32 to 42, whatever it ends up being, right? Those are the trades to take.
Yeah.
But anyway.
Lots of debate. Very interesting.
All right. Can you pull up the last chart you had? Not this one, but the last one.
The MSTR one? Was it that one?
Yeah. Yeah.
Yes. And linear and
look at that weekly cloud
off. Was it? Hold on, I didn't even look at it. Oh, it's in it.
It was like at 720? Gross.
Chat, I am here to show you this weekly cloud. I'm just kidding. I didn't even see it.
Yeah, that's crazy.
That's wild.
So I've talked a lot about head and shoulder bottom failures. If you look on the left side of that chart, you can see one that did exactly what I talked about.
Oh yeah.
Which is it failed? No, left. More left than that.
More left. Where? Over here?
Yeah, yep, there. I'm on a delay here, so like I'm watching your shit like 15 seconds behind.
Give me like a year and month, and then I could
2021, beginning of 2021 to October.
Okay.
The head and shoulder bottom.
Not really.
Hold on.
Hang on. I'm gonna give you the wheel. I'm gonna give you the wheel, and then you show it. Okay, it's on the Zoom. There you go.
Okay, so a share window. Dixie.
Not the porn window.
Right. There you go. Yeah, and that's the other window. It's the other Dixie. All right. So if we go to MSTR, were you on a weekly or something?
I was on weekly.
Monthly?
Yeah.
Weekly. So if we go back in time, boom.
Okay.
This looked like a head and shoulders bottom.
Okay. I'm with you.
If you're here, you're like, oh yay, nice breakout, and then the failure to break out, immediately hunts for the head of the head and shoulders, like aggressively hunts it. Right.
Yeah, Bitcoin had a similar failure like that in 2017.
Yeah.
2018.
Anyway, I was just pointing that out because it was something
That's
I talked about on Ethereum.
Don't you be bearish on Ethereum now.
Wait, was it Ethereum? Oh no, I was talking about the Adam and Eve double bottom failure. How it broke out and
how dare you?
Yeah.
How dare
But,
so that's awesome.
So yeah, I'm gonna spend most of my time talking about Dixie and Bitcoin from the other side of the coin. No pun intended. Do I want to exit this mode? What mode am I in? Oh, replay mode.
The replay.
Yeah. Hit yes, boomer.
Yeah. So no surprise here. This is obviously bullish for crypto, right? Anything bearish, Dixie is bullish. Everything non-dollar, right? So if you have an asset denominated in the dollar, if the dollar goes down, asset goes up, right? It's just simple numerator denominator type stuff. The one thing I'm personally looking for is I want to see it closed on here. It's very possible to see something like this where it looks bearish and then for whatever reason just rallies because fuck you, right? No reason whatsoever, but it just did. And typically with these like bouncing ball sort of things, they last a lot longer than you're expecting them to. And they tend to grind people out and they get people over leveraged in positions. And we just kind of like get these like stop hunts that happen, right?
Mhm.
If you look back in time, for Bitcoin on both instances when it did it, both on a larger time frame and on this time frame, we had multiple instances where it looked like, oh, this is the one, and then for whatever reason, it just made a slightly lower high. So I just reserve judgment on like this sort of thing until I see either, for whatever reason, this thing rallies, and then if this thing rallies and it breaks its high, well then good luck Bitcoin. I don't know what it's going to do after that. But if it closes down here, well then cool. That's actually really good. That's what we're looking for. It would close a nice monthly candle in 2.5 weeks or whatever. But for me, I'm looking at nothing lower than the weekly, and ideally, I'd like to see a monthly close down here because this is like a multi-decade level, and so multi-decade levels should be handled on the appropriate time frame. So for me, like, yeah, this is exciting. I want to see that for a bullish anything. Gold, silver, crypto, flowers, whatever. If those things, if the dollar closes down here, this is a very, very bullish signal. And if you look at things like trend, for example, with our cloud, I don't know what the hell that was, but if we look at cloud, this thing's been projecting a bearish trend. By drawings, this thing's been projecting a bearish trend for a while. The question is just like, well, where's the trend? Because it's been flat. So this thing closing down here would be a nice boost of confidence if you're a crypto bull. So now that same hesitance with the Dixie, I'm also going to apply to Bitcoin. The weekly Bollinger Bands are squeezing. Cool. That's what we want to see. We want to see consolidation on the weekly Bollinger Bands for a weekly trend to give birth. However, they're consolidating in kind of, so if we look at this, a simplified version of Bollinger Bands, and we look at RSI, which is just like the 80 IQ version of Bollinger Bands. Bollinger Bands are just like a, a, a visualization of trend, consolidation, all this sort of stuff. RSI is very good for trend, and that's really about it. It kind of sucks in consolidations. But if we look at the weekly RSI, I mean, it is very obviously diverging. We had it's this, you can't really tell right here, but if we look at it from like a line chart perspective, it very obviously had a higher high there on a lower high on the RSI. Now, does that mean that, all hell's going to break loose? No. It could very easily just keep going, and then maybe RSI ticks up. Like that's happened plenty of times in the past. We can look at some examples in the past year, right? We had a lower high, and then it just diverged all the way up. So divergence isn't necessarily like the end all be all of reversal signals, but it is something that you should be like, huh, that's interesting. That's happening. It's interesting that Dixie's making a low midweek. I would have liked to see that this low happening like on a Friday, so it could just kind of put the nail in the casket, and we can say, okay, conclusively, this is a bearish close. But now we got to wait a couple of days. And while we're waiting, something that's looming over my mind is I don't know, bar chart, I want a candle chart. Something that's looming over my mind is I know who the fuck does that. Is this ascending broadening wedge that's forming throughout this consolidation? So much like triangles, wedges tend to be trend agnostic. There's like a slight preference for like reversals here, but it's nothing like immediately like, oh, this is a bearish indicator or bearish consolidation, right? Like when you have your bull pennants, this is very clearly a bullish consolidation. We have our bearish pennants is very clearly a bearish bias. With ascending broadening wedges, it's not as clear cut. And so really what we can look for is it has two targets. One target is going to be the bullish one, which is we project this thing way up here. And we then you measure the breakout from the lowest point to the breakout, and we just project that upward, which would give a disgusting upward target. Let's just play hypotheticals here. Like, let's say this thing runs to here, boom, There's the high. There's the low. We get a roughly 28K projection. Then we just go, okay, what's 28K above this price? And it gets to about, basically a new all-time high. Cool. That's great. I could totally see that happening if Dixie gives way and finally just gives up already. It's tired. It's so tired, right? But it's not doing that at the moment, and Bitcoin's hesitating, and that makes me say, okay, well, why might it possibly be hesitating? Well, we have this RSI divergence, we have declining volume on Coinbase, and the reason why I look at Coinbase specifically is because it doesn't have any leveraged assets on it. Things tend to get weird when you start to have leverage mixed with non-leverage, and you get wash trading, and you get all this other sort of crap. And although Coinbase isn't representative of the whole market, it is a great pulse on the market, in my opinion. And when we look at things like this broadening wedge, okay, cool. We've got this disgusting target where if it breaks this upper trend line and it runs to all-time high, well, broadening wedge projects it. But the other side of the coin is if this thing breaks down, the downside target of this is actually the root of everything, the root of evil, which is down here, right? So if we get so let's say for whatever reason, we get a pullback, right? And it doesn't hold this little trend line. We start closing down here. Well, that would have pretty deep target, which would be down here. Retracing essentially the whole run back to 16K. That was exceptionally straight. I'm really impressed with myself there.
That's huge. That's huge.
Yeah, that's big wins. Easy straight line. All right, so if this thing starts closing down here for whatever reason, maybe Dixie bounces or whatever, and it just pulls it back, or maybe there's like some outward rejection of like the BlackRock ETF. Well, these are the things we should be looking at. So until Dixie gets a decisive close down here on the weekly, that'd be great. On the monthly, that would be ideal. I just am a little bit more reserved, I guess. Now there are other signs in the market that say, okay, cool. This is a bullish, environment, right? We looked at things like S&P 500 or SPY, whatever, same thing. Very clearly a bullish trend on the weekly candles, almost back up to the all-time high. It's not very far away. It's only 7% away.
That blows my mind, by the way.
Yeah, absolutely crazy. QQQ, NASDAQ, almost to the all-time high. Like, who had that on their bingo card at the beginning of the year? Not many people.
Well, QQQ is right at that level that Jack was talking about, as far as like the retest,
Yes. So for those who don't know what we're talking about, this level here, this tends to be a very when we have bear markets, you can call this a bear market, I guess, a 1-year bear market. There are levels that tend to be points of liquidity. In our case, for QQQ, this was a point of liquidity because this was the highest high of the bear market. After there was the first swing high, which is where a lot of bears will put their stops, right? So this is a very strong point of interest. So maybe we reverse here or whatever. But in terms of trend, it looks great. Like, it looks great there. We see, very strong leaders in the indices, right? The only thing is that's like, well, what is the dollar going to do? That remains to be seen. Other bullish indicator that I'm looking at here, we look at grayscale. I know Josh look away. This is standard settings, default settings.
Josh is puking violently.
It is on the verge.
It's fine. Look, if you want to trade at worst, that's fine. That's on you.
It's on the verge of a full-blown breakout. Well, not full-blown.
Full-blown AIDS. I mean,
yeah,
full-blown doing breakout.
Yeah, full-blown bull penetration, right?
Bullgasm. Yeah.
Yeah. If we get a closeout here, man, that'd be great. It's not always the best indicator until we have like the Tenkan and the Kijun sticking up through the cloud. Here's a great example of that. But I mean, it is definitely, it's hinting toward, hey, maybe if we get a closeout here, that'd be great. Now, this is also an obvious point of rejection. If it completes the edge-to-edge trade, it entered here, it had like a bit of uncertainty here, but it made the obvious target here. So in my book right here, it's like there's a lot of bullish potential here, but it's like it could also fail. So I just remain a little bit more agnostic in the price. I'm not outwardly bullish. I'm not outwardly bearish. I'm optimistically leaning toward bullish, but if I'm looking at the chart objectively, I'm like, I can't decisively say one way or the other. Now going back to this divergence idea, RSI is showing clear divergence, and one other metric we can use to get a better visualization of divergence is the Bollinger Bands. I love Bollinger Bands. They're a great objective tool. And it has a setup. I referenced this last market power, which is like, I don't remember, a couple weeks ago, 3 weeks ago, I think, where we have this 3 pushes to a high. We get 1, 2, that's a terrible 3, 1, 2, 3. And the way we would visualize this on the Bollinger Bands is we see, we see the bands contracting, but we see 3 consecutive highs, but relative to the Bollinger Bands, they are all making lower highs. So this is percent B, for those who don't know, which is just basically price relative to Bollinger Bands, and this is the BBW, which is the width of big beautiful women. Yeah. Also the width of the Bollinger Bands. So anytime we see this sort of thing, this is a typical reversal pattern. So, there's a lot, and we're running into resistance. So there's like obvious resistance here. We're hesitating. We're on low volume. So until we see, I think the market is really just waiting to see how Dixie reacts. Yeah, that's about it for me. So just keep an eye out on Dixie. Wait for the weekly close. Things are set up for success. They're set up for good things, but we need to remain objective and look at like, well, what does weakness look like? What should we be looking for to say maybe I'm wrong? Those sorts of things. And right now we have divergence. We have decreasing volume. We have weakening impulses. Right. This is very clearly a smaller leg every time. So yeah, just all things to keep an eye on.
Okay. Well, guys, we've got like 1 minute left. Why don't we go around the horn and gun to your hamster? Are you bullish or bearish? Schmitty, you want to? What do you think?
Gun to my hamster.
Yeah.
Man.
Serious.
I honestly genuinely do not, I wouldn't feel comfortable one way or the other. I would personally lean bearish just because it's at resistance, it has divergence. We're
hasn't proven itself yet. Fair enough. Josh?
You gotta say bullish here, right? You gotta. Who in the right mind would be bearish here?
Right after Schmitty says it. Okay. Good.
I just want a retest of the higher high and see what happens, because like we could have a 10% day on our hands, but I don't know. Are we gonna zero out on everything until the 26th when the Fed talks and the news that we already know is happening is going to happen where they're going to raise? I hope not. I really hope not. The wild card is always some random ETF news on any given day.
Yeah.
The closer we get to the next deadline, the actual like final deadline isn't until like March 2024 for all of them. So
oh my gosh, it's like the halving and the deadline.
Yeah, exactly. If they really wanted to, they could string this out all the way until the halving, which is perfect, obviously. But
okay.
I'm still bullish in the near term until you make lower lows here. I don't think you can be bearish.
All right, Schmitty's bearish, Josh bullish, and then I am also bullish. Thank you, everybody.
That's right.
For a market power hour. We're glad you spent your afternoon with us. We'll see you next time. Have a good one.